Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
New week, new opportunities. Welcome to Modern Investing Techniques, episode 105 for July 13th, 2026. I'm Patrick, coming to you from Vancouver. Monday means fresh setups. Let's break down the week ahead and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Energy and mining allocations in Canadian portfolios could see renewed interest as global nuclear demand and a sharp oil spike align on the same day. The S&P 500 closed at 7,575, up 0.4%. The NASDAQ Composite closed at 26,282, up 0.3%. The TSX Composite closed at 35,305, also up 0.3%. Oil prices jumped on US and Iran airstrikes, while chip stocks faced renewed volatility on valuation concerns. The Bank of Canada meets Wednesday amid turbulent Canadian data and global geopolitical noise, with markets pricing in limited near-term easing. Nuclear power buildouts are emerging as a sector leader this week as countries accelerate reactor plans through 2040. Our matched window alpha sits at negative 0.89%, which tells us the recent setups have not kept pace with the NASDAQ during overlapping holding periods. That nuclear demand signal is exactly why we are opening today's strategy spotlight on how to invest in the supply chain rather than the utilities themselves. Nuclear supply chain investing focuses on companies that provide uranium, specialized mining inputs, or reactor components rather than pure power utilities. Today's combination of global reactor commitments and Canada's federal target of 10 new units by 2040 creates a multi-year demand signal that is independent of short-term oil moves. Investors can screen TSX listed names in the uranium and critical minerals space using free tools such as the TMX Market Intelligence Screener, filtering for market cap above $200 million and positive free cash flow trends. The approach has historically delivered strongest results in the early phases of multi-year CapEx cycles, as seen in the 2005 to 2007 uranium bull market. That same period showed how volume spikes often confirmed the real start of sustained moves rather than false starts. Pair any position with a same-day volume check above the 20-day average to avoid low liquidity traps. Execution risk remains if project timelines slip, so the screen alone is never enough without that liquidity filter. While we wait for clean volume signals in energy names, let's examine a broader lesson that applies to every hot theme, including today's AI stocks. Imagine you bought a high multiple semiconductor name last month after an AI infrastructure headline. Your order filled at the open, but the stock then dropped 8% on profit taking, even though fundamentals had not changed. The mechanism at work is identical to 1999 to 2000. Investors priced in years of future growth in a single quarter, so any hint of slower CapEx produced violent repricing. The bid-ask spread on many AI-related names widened from 5 cents to 25 cents in the first hour of trading on July 13th as volume spiked. What most retail investors miss is that the companies that survived the dot-com bust already had real revenue and defensible cash flow models, while Pets.com and Webvan did not. AI stocks today sit in a middle ground. Many report genuine revenue, yet valuations still embed the same "this time is different" assumption. The biggest mistake is treating every AI revenue beat as permanent. Instead, always demand 3 consecutive quarters of accelerating free cash flow growth before adding to a position. That same discipline of waiting for confirmation is why we are skipping a new trade today. This is a simulated trade for educational purposes only, with no real money involved. No new position is being initiated today. Oil price spike and nuclear demand growth are both visible, Yet no single ticker shows the 3 or more aligned factors of volume confirmation, technical setup, and sector momentum required under the current regime. We are watching for Canadian energy names to close above their 20-day volume average on the oil move, but none have done so yet. The recent cold streak in matched window alpha at negative 0.89% requires stricter entry criteria going forward. Skipping a trade when factors are not aligned demonstrates how to protect the portfolio during low conviction periods and forces focus on only the highest quality setups. Listeners learn that patience is an active risk management decision, not inaction. The explicit trigger we are monitoring is that volume spike plus RSI 14 moving above 45 from below. No newly closed trade since the last review means there is no new realized result to report today. The most recent practice investment has already been reviewed and current holdings remain open pending their scheduled evaluation. This keeps the focus on the open position rather than manufacturing a result that does not exist. When the next close arrives, we will examine whether the thesis played out and what moved the name. For now, the absence of a new close reinforces the value of holding the line on entry standards. Binance Futures Volume Dashboard shows $1.61 trillion in June futures volume, an 80% month-over-month increase even as spot crypto volumes remained weak. The platform's public futures volume API lets investors track institutional positioning in real time without paid terminals. Canadian users on Interactive Brokers or Questrade can cross-reference the same data via the CME Bitcoin futures feed to avoid single-source errors before any crypto allocation. Benzinga Pro Stock Screener filters US and Canadian equities under $20 by revenue growth, short interest, and options implied move, giving retail investors the same quantitative cuts once limited to hedge fund terminals. Users can set alerts for names crossing above their 50-day moving average on above-average volume. The free tier covers basic scans while the trial unlocks real-time options flow. Air Canada has reached a new tentative agreement with the IAAW union. The deal covers 11,000 technical, airport, and cargo employees. This pact removes a near-term labor overhang for the airline. The agreement follows extended talks between the carrier and the union representing those workers. Investors can add AC to a TFSA watch list ahead of further developments. Review should occur after the ratification vote results become available. Any post-deal volatility may present a potential entry opportunity once the outcome is clear. Oil prices jumped and world shares finished mixed after US and Iran carried out airstrikes. Crude spiked on the geopolitical headlines. Broader equity indices posted only modest gains despite the energy move. The reaction in equities remained contained even as crude futures advanced sharply. Investors holding energy positions should trim any existing overweight if crude closes back below Friday's level. Otherwise, the current allocation can be maintained. The situation leaves room for continued monitoring of how the commodity settles after the initial headline reaction. The regulated iGaming market has gone live in Alberta. Private sports betting and casino operators can now apply for licenses in the newly regulated provincial market. The launch opens a formal framework for previously unregulated activities. Participants must wait for license awards before any revenue projections become reliable. Revenue share terms will also need publication before operators can assess economics. Investors should avoid adding any new gambling sector exposure until those details emerge. The process is expected to unfold over coming months as applications are reviewed. SK Hynix shares tumbled after a strong NASDAQ debut. Profit-taking and oversupply fears triggered a trading halt on the co-SPY after the ADR listing. The move followed initial enthusiasm for the memory chip maker's U.S. listing. Oversupply concerns resurfaced quickly once trading began in the home market. Investors should wait for a retest of the post-debut low before considering any memory chip names. The halt itself reflected rapid sentiment reversal after the ADR open. Further price action will determine whether the name stabilizes or extends the decline. Our matched window alpha of negative 0.89% reflects the stricter filters now in place after several setups failed to clear the three-factor threshold. The AI analysis is learning from that pattern and adjusting by requiring volume confirmation before any new simulated entry. This keeps the overall book focused on high conviction names rather than forcing trades during mixed signals. Now, here's something that most retail investors get wrong, and it cost me money before I figured it out. You see a high multiple name surge on an AI headline and jump in at the open only to watch it drop 8% the same day on profit taking. The mechanism is the same as 1999 to 2000 when investors priced years of growth into one quarter and any capex hint triggered violent repricing. The fix is simple: demand 3 consecutive quarters of accelerating free cash flow growth before adding to the position. That single rule would have kept you out of several names that repriced sharply on July 13th when spreads widened from 5 cents to 25 cents. Before we wrap, keep an eye on any Canadian energy name that closes above its 20-day volume average with RSI 14 moving above 45. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. OmniView, a balanced daily world news briefing that takes every side seriously. Find every show free at naranetwork.com. The Do Positive Pod is the club for people who do something about it. Episodes and the dispatch wall at naranetwork.com/thedppod. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you